Okay, hey, good evening, everybody. It is May 11th, 2011. This is a crude oil chart. We had a lot of great setups this morning on crude oil, the Euro, British Pound, Aussie, S&P, and NASDAQ. But more importantly, this video is going to be a recap of the setups. So I'm going to spend about 5 minutes and go over the top 3 setups we use in the day trading room. If you have not played video 1 and video 2 yet, please play those first. They give you the background and the exact rules where I want you to get in on these setups. This will be a recap on the setups that I want you to look for every day when you trade all these markets. Now, like I said before on the previous 2 videos, make sure that you narrow your focus. Trade 1 or 2 markets tops. Okay, a lot of my traders in the day trading room trade the Euro and crude oil. And then I got other traders that just trade the currency market, you know, Aussie, British Pound, and the Euro also. And then I still have a few traders that trade the S&P and NASDAQ. But the point is, pick 1 or 2 markets and just stick with it. You can't trade all these markets. The majority do very well in the room, just trading the Euro and also crude oil. Okay, so let's get started. There's 3 setups in the live room that you want to concentrate on. The first setup is the 1, 2, 3 setup. The 1, 2, 3 setup is a very, very powerful setup because we are buying and selling off of institutional support and resistance. We're letting our divergence indicator tell us if it's going to turn at those support and resistance areas, and then we're letting our buy and sell zone confirm it with the number 3 down here also. So let's look at the first trade. These 3 actually back-to-back trades worked out just beautiful. And let's go through them. The first thing you want to do when you're looking for a 1, 2, 3 setup is that you want to look for support or resistance. You can see my number right here. This is a semester number. Okay, this is a 6-month number, 100.23. That was resistance. Okay, it provided good resistance support yesterday on oil also. So as the market came up, you know you're coming into institutional resistance. Now, the tone on oil was down this morning already. Our 5-minute trend was down. We are below all 3 market profile levels. And we know if we're below all 3 levels, the tone is strictly hard down. So the short side is your bias. Now, as the market came up, it came into institutional resistance. That's number 1. For 1, 2, 3 setup to solidify, you have to have support or resistance. There's resistance. Okay, at 123. Number 2, the easiest way to see this setup for all you traders that are new to this system is that wait for the divergence dots to pop. If you are on an institutional support or resistance and you get the divergence dots, you got 2/3 of the trade. 2/3 of the requirements for a 1, 2, 3 setup. So get ready for a trade. 3. You want to see if we're into the sell zone. The sell zone can hit before you even hit institutional resistance. Okay, and I like to see divergence on that also. As you can tell, we came up to 23, hit institutional resistance. That's number 1. Number 2, the requirement is we got to have divergence dots, which we had. Number 3, you got to be in the sell zone, which we had, and it also shows divergence. Look at that, triple divergence at the sell zone, right into the number. Now, a lot of you don't know this if you're new to the room. What are these white bars? These white bars represent reversal bars. To qualify the trade as part of the rules, you look for 1, resistance or support. Number 2, the divergence dot's got to pop. 3, you got to be in the sell zone if you're selling, buy zone if you're buying. But then you got to qualify the trade for the entry. And these white bars will turn white after you have a 1, 2, 3 setup when it is a what's called a pull-in bar. It will come up about 1.5 bars right around here later. So that allows you to get short the oil market at this level. Place your stop 2 ticks. You can place your stop above the swing high if you want, or if you have another swing high that's a little bit higher, you can place it above there. A lot of traders in the room, they have a hard stop that they use already, and that just depends on your risk tolerance. But I like to look at the previous swing, and I like to place it just above the swing. Okay, on a 1, 2, 3 setup. Now, here's the thing about it is that oil stops are going to be a little bit bigger. Now, when you place your stop above 2 ticks above the swing high or 2 ticks below the swing low, is that you can, what I like to do is if the number is 123, right, 100.23, then I'll like to put my stop at 100.33. So my stop is going to be up here at 100.33. Okay, it's a good way to do it. All right? Or if you want to be a little bit more conservative, tighter stops, 2 ticks above the swing. And as you trade oil, like the majority of my traders do in the trading room, you're going to get used to the stop placement, whether you want to place it 10 ticks above the institutional number or below, or do the swing high or swing low, depending on the setup. Okay? The reason I like to do that is it likes to M top or W bottom, and I want to make sure that I'm still in the trade. Now, the market moves down. We come down to another institutional support. Well, now this is what's called a counter 1, 2, 3. A counter 1, 2, 3 is against 5-minute tone. It's still a trade. 1, it has to be on support. 2, I got to have divergence. This is actually triple divergence, the best divergence you can have, and so is this up here. You see these 2 dots and then a lower peak. That's triple divergence. Here's 2 dots, a higher peak. I mean a higher, the indicator shows a higher low. That's triple divergence. So there's 1, triple divergence here. 2, 3, look at this. You're at the buy zone with triple divergence on the oscillator down here too. And then you're right on it. I look for a doji hammer spinning top to get into the market. Here it is. Here's your white reversal bar that popped up on this bar. Your stop loss is a swing below here or 10 ticks below this level. And then off to the races next to the next institutional level. Now look what happens right here. Right here, what happens on a 1, 2, 3 setup. What do we have? The divergence dots pop up, and I got a hammer, so it rolls the market down, but what's missing? It hit the sell zone, so that's okay over here, and it showed divergence, right? This is divergence, so that was good too. So I'm okay there also, but what am I missing? I got number 2, and I got number 3, but I don't have number 1. If you don't have number 1, you don't have a 1, 2, 3 setup. Look at what happens. The market goes down, grinds higher right to my level, and my level calls a high, and we roll straight back over. So that's the discipline about this system. There's no subjectivity to the system. Either you are on support or resistance with divergence or not. Let me repeat myself. Either you're on support or resistance or you're not. Okay? Here, number 1 is on resistance on the sell, on my semester number. Down here, I came down to my daily number on support. Right? Came back up to my semester number, and then I rolled over. Okay, 1, 2, 3 is perfect. I got a 1 on resistance on the semester. I got a 2 divergence dots popped up. 3, I'm in the sell zone, and right here you have the rollover right at the semester. Now look at the pull-in bar. The bar turns white 1.5 bars later to confirm the downtrend is going down. Now once you get good at trading oil and the euro and so on, you won't wait for this white bar to turn white to get in the trade. But it just helps you recognize where you should be buying and selling. In other words, if I come into a resistance up here, support down here, resistance up here, I'm going to look for a doji hammer spinning top, look for a pull-in bar, which is a close below the previous candle close on a smaller tick chart. You can use a 110 tick on a pull-in bar to pull you in. That's a close below the previous bar candle at this resistance. You can do that also. Okay? The more you trade it, the more you understand. But this just shows you that this is 3 for 3. Using 1 resistance, 2 divergence, 3 the sell zone, then the white bar to enter. Okay? So same exact way over here. If you look down here, we had a 1 support, 2 divergence, dots popped up. 3, we got triple divergence on the oscillator, which is at the buy zone. There's your white bar that popped up. There's your stop loss below the swing, and it goes right back up. Look how powerful this is. We're talking about swings of 98.70 all the way up to 123. You got to be kidding me, right? 98.70, you had 1, 2, 3. 3 of them. Back to back, that was 100% correct. 3 of them. Okay? You don't have to trade a lot to make a lot of ticks in the market. You just have to be knowledgeable enough to trade with the institutions. The public is always wrong. Okay, they have these lagging oscillators, and they do not know how to trade out these institutional levels. Remember, I'm looking at yearly numbers, quarterly numbers, semester numbers, etc., and look how I nail the highs and lows. Okay? Line it up. This did not line up for resistance, and that's why it rolled over and went higher. Okay? So that's the 1, 2, 3 setup. Let's move on to the next one. The next setup, well, remember, there's 3 setups you're going to look for every single day in the market. This happened today also. We had a huge day in the market again today. Beautiful setups. The next setup is my wedge breakouts or breakdown my auto wedges. Now my auto wedges are textbook. They had 5, count them, 5 100-tick trades today on oil. 5 100-tick trades. The euro had 3 60-tick trades just off of this. Now look at, what you do is this. Here's the institutional level. Once you break the institutional level, or when you're on the institutional level, I want you to look for these yellow wedges. The only 2 times I want you to look for the wedges is I want you to look for these yellow wedges to pop up on institutional numbers on the 233 tick or my market profile dots on the 5-minute. There it is. Once they pop up, here's your wedge. Look at the close below the wedge. Look at this trade setup. And this is not even counting what I just showed you on the 1, 2, 3 setups, right? I mean, we're talking the moves today were just incredible. All my setups were cranking them out all day. So as the market broke the institutional level, we have another setup. We have now a momentum setup. The 1, 2, 3 setup right here, that is buying and selling the swings, right? This is a huge swing. 98.74, right? All the way up to 123. That is a huge swing, right? We're talking 150 ticks. So that's a 450 tick swing on 3. Now, if you look on a momentum play, would be here. Look at the breakdown on not the swing trading on the 1, 2, 3. I'm calling the highs and the lows, but we're catching momentum. If that market is going to fall apart, we're going to catch it, right? And you want to catch it with the wedges. Make sure, and I cannot stress enough, I get emails like this all the time, you have to have the wedges line up on institutional support or resistance or just breaking a market profile dot. If you are going to take a more aggressive stance on the wedges when they pop up, if you're below all 3 market profile levels or above all 3, then you're okay. Okay? But look at this. There's the institutional break, right? Look, the wedge forms right on the first retracement back up. Now here's the key. Look how we broke down the institutional number. The first snapback retracement, they're taking the public's money, take their money, take their money, take their money, then they break it back down. Look at that trade. How beautiful is that trade setup? You took no heat on that trade at all. Okay? Then we break my level, 123. I just showed you a trade off 123, right? I just showed you a trade right here. I just showed you 123 right there off my number on a 1, 2, 3 setup. Well, guess what? You play the wedges off of it too, guys and gals. How neat is that? I'm giving you 3 setups where you're going to know exactly what to do every single day in the market. I'm giving you momentum setups. I'm giving you the setups to get the swings in the market every day too. But look at this. We broke, same setup. We broke the institutional level, my semester number, 123, my 6-month number. The first retracement, it came back up, and I broke the wedge again. Look at that. It's the same trade setup that happened up here. It went down, first retracement, broke the wedge, and stick a fork in it. Look at that trade setup. I mean, we're talking 100 ticks, right? And then we get another 100-tick move. So I'm just showing you right there, 3, 4, 5 trades, right? 5 trades. 5 trades. 450 on the first swing, 550, 650 ticks, right? We're not done yet. Now hold on. The third setup. That's the second setup. Remember, the first setup is a 1, 2, 3. 1, 2, 3. 1 institutional resistance. 2 divergence dots. Easy way to see it. Let the divergence dots pop on support or resistance. 3 the buy-sell zone. Let the white bar pull in or look for a doji hammer spinner. There's the first trade setup. Number 2 setup is the wedge breakout or breakdowns. That is where you actually break an institutional number or you're on an institutional number and then it finally breaks the wedge with tone, meaning with the 5-minute tone, and there's your break. Okay? It's your second setup. Right? We're not done yet. I got another setup. I have a retest failure setup. Check this out. Alright? You think those are 2 good setups by themselves? I'm showing you how you can turn your computer on every single day, turn it on, and you're going to know exactly what to do every single day in all these markets. and you just got to pick one or two. Pick the euro, pick oil like majority of my traders. You're going to know exactly where to sell to the exact bar, no subjectivity, where to place your stop, where to get out, where to get in, okay? It's a retest failure trade. It's my third trade set up. Now look at the retest failure, break of M and W patterns. This was this morning on oil again. This is what got the sucker rolling in the first place. What a retest failure is, if you see a W pattern like this, okay? If you see a W pattern, that means a double bottom like this. When it breaks that double bottom, okay, and if it's with my 5-minute tone, with my market profile or with my 5-minute tone moving averages, you want to short here. Look at that trade setup. It was an 80-tick trade. All right? Now, we're over 700 ticks, 730 ticks, right? But look what happens. There's a wedge break, right? And then we come into a 1, 2, 3. Look how all three of these go together, guys and gals. I got a retest failure, I got a wedge break, and I got a 1, 2, 3 that bounces the market. You will know exactly how to buy and sell the market every single day